What's up, you guys? Zoeb here for OneGlanceTrader.com, and in this video I'll be sharing with you my step-by-step approach on how to trade counter trend reversals. Now, a lot of you guys have been asking me on the indicators that I use, where do I enter, where do I exit, all that kind of good stuff. So in this video I'll be walking through an example, what indicators I'm using, where I would enter, where I will put my stop loss and take profit targets and all that kind of good stuff. And all the indicators that I mention in this video are either part of the TradingView platform or can be downloaded absolutely free. Link is inside the description, and tutorial videos for each one of those indicators is also inside the description. All I ask for in return is that you smash that like button and make sure you subscribe and hit that bell notification so you don't miss out on any videos. Now, I've got a screenshot here of the Euro USD 1 hour chart, and this was a textbook example of what I'm going to go through. And not all examples are going to be as good as this, but it provides you the framework that you need, or the indicators and the approach I take to look at this information. So if I first go through the indicators I've got on the chart, so the first one is the OGT round numbers level. If I just get the right pen so you can see it there. So you can see these numbers, and if I scroll across here, you've got round numbers at key 00 or 50 interval numbers, and they are what I seem to call natural support and resistance, and they're used quite often as natural reversal points or points of consolidation inside the market. So I like to have that on my chart so I can see where price is and what happens and how price reacts to that particular natural support and resistance lines. The next one I've got on here is the OGT Pivots indicator, and what the settings I've got on here is basically the daily pivot. And again, in the latest version, you can get 15 half an hour pivot, so you can really scalp using a pivot strategy on lower time frames. And I've got a playlist in the top right corner and in the description that goes through my kind of missed pivot strategy and all these kind of different things that I've got utilizing pivot points. And the reason why I've got pivot points on my screen now is basically for kind of missed pivots, and as well as natural support and resistance for take profit and entry setups. The next one I've got on here is, you'll see a bunch of moving averages. So these are moving averages that range between the 30 EMA and the 60 EMA, and in the description you'll have all the moving averages on there, so you can note them down and place them on your charts. They're standard as part of MT4, and again, that's really for trend direction and also helps me to identify reversal points inside the market. And then the last indicator I've got on the screen is the MACD, but it's slightly different. It uses the linear weights moving average. What I like to do is use a lot of divergence, as you guys know who follow my channel weekly, and it just smooths out the MACD a bit more than the traditional kind of MACDs that you normally get. Not only the standard MT4, because that doesn't have the kind of fast signal line, but general MACD indicators aren't really that smooth. So I find that the LWMA smooths that out even more. And again, the link to that is also inside the description if you want to pick that one up. So, oh, actually, I forgot. Actually, we do also have these arrows over here, and this is my famous OGT RSI MTF indicator, which uses the RSI, as the name suggests, and signifies where price is overbought or oversold on multiple time frames. And the settings on here is for the current time frame, which is the 1 hour and one time frame above. So in this particular example, you can see here that the price or the RSI reading is below 30 on the current time frame, the 1 hour, and also on the 4 hour chart there. And again, the reason for this particular indicator is that we are looking for points of exhaustion, or where the market has been extended across multiple time frames, which gives us a high probability. It may not happen, but a high probability chance that price could either reverse, where you can take a little bit of a scalp trade, or a full long-term reversal into a brand new trend, which is what you see in this particular example, over here. So now we've got the indicators on the screen. I'll walk through the things that I look for, and again, not all of these things are going to happen. If you get the majority of them, then again, adjust your risk sizing appropriately. The more of these factors you have in, the more probable that the likely outcome of a positive trade is there. So that's where you need to look at all things in perspective. If it's got one of the elements, such as bullish MACD divergence, I might only risk 0.1% of my account as opposed to 0.6% of my account if it had a missed pivot and also an overbought oversold on multiple time frames, as an example. So again, the first thing we want to look at is trend direction, and then for this we use the EMAs. So you can see here that in this particular move that the EMAs are quite fanned out, and the further they're fanned out, this signifies the strength of the trend. And as we see here that the moving averages, as when price goes into the moving averages, it doesn't really change any of their kind of direction, so therefore signifying that this is a pretty strong trend. So adjust your risk size accordingly based on when you think a reversal is going to happen. So that's the first thing that I look for. The second thing I look for is I like to see missed pivots. So you might not be able to see it on this, but I've checked it, the highs and the lows on the chart. This pivot here has been missed, and I've talked about it a number of times on my channel that about 70 to 80% of the time you'll see that every single day pivots are hit. Right, as you can accept here, we've got a missed pivot over here. So as you can see, majority of the time the pivots are hit. But when a pivot is not hit, what that signifies to me is that the trend is, it's either the trend is very strong, as you can see here, and then we've got the EMAs to also confirm, because when this price action finished for the day, you can see that the moving averages were fanned out and you had a missed pivot, signifying quite a strong trend. So at this point, I get quite interested for a trend continuation trade or eventually a reversal trade. So I like to look at that, because generally is when you have trends like this and you have a missed pivot, normally what happens is that price wants to get back to its missed pivot level. So you can see here at this point here, price actually hit its missed pivot. So again, they provide great take profit targets, or at least around a range or just below or above a missed pivot. So more on that later on when we talk about exits. But that's what I like to see. So we've got a trend going down, MA's fanned out, a missed pivot, and then I don't do anything. I kind of just wait and see what happens. The next thing I like to see is a signal on the RSI MTF indicator, and again that is showing here that the price is oversold on multiple time frames and a missed pivot, and the EMAs are also fanned out as well. So this is telling me here that we are in a prime position that price may potentially reverse or into a new trend or a counter trend trade. And then the last thing I like to look at is divergence, as I mentioned earlier. So divergence is where there's a disagreement between price and an oscillator. So in this example, if we're a counter trend trader, we are looking for bullish divergence. So bullish divergence is basically when price is making lower lows, and the MACD in theory should also be making lower lows, but in this example over here it's flat to a slight decline. So there is a disagreement between price action and the oscillator. Now, because the oscillator calculation is derived from price, in theory they should really match together. But when you have this kind of permutation, it means that there's a strong probability that there's a reversal. Now, all these things that I mentioned, missed pivots, RSI, oversold and overbought on multiple time frames, divergence, etc., are very good on their own. But imagine if you added all of these things together. So in this particular example, you have got a missed pivot. You have got the RSI overbought, oversold on multiple time frames. You have bullish divergence. And what you've also got, it's not that most ideal, but where it's printing the divergence, you can see it's very close to this round number level. And again, another great signal is that if you're getting resistance or support in this example at a near enough a round number level, therefore again gives you the probability there could be a bounce off that level because there's a number of orders sitting at that kind of place. So that's what I like to look at. So when this situation kind of forms and we start seeing this, I really get interested when I start seeing the RSI kind of printing, because that's when I start getting interest on my chart. When the RSI is there, that's the signal for me to come to my charts. I can quickly see that we've got divergence, we've got a missed pivot, we've got a strong trend in place. Now, what is the next step? The next step now is, for me personally, is to find out what my take profit target is going to be. Now, assuming that we're at this stage over here, for me, the next step, the max I'll be looking at is this level over here, because that's that missed pivot level. So I'll be looking at take profit targets either at this level or at this level, because I like using round numbers or natural support and resistance lines as my take profit target. So I think to myself, can price get there? So if I think price is going to at least get to this level, it should, in theory, high probability it'll get to here and a very high probability it'll get to there. So those will be the first two things I would look at for a take profit target. But then what I like to do is, in terms of my entry, I'd like to see, there are many ways you can enter, but the most easiest one probably for new traders is a break of the the MA line. So you can see here that price has gone across this MA, or price hasn't touched this MA or the 60 period MA until this close of this bar over here. Now when that happens, a lot of things are going on, because you've got a trend here, which I haven't drawn that properly, but it's kind of broken that trend line. It is now got to a point of passing the 60 EMA, which it hasn't done throughout this whole period. You've got a bounce off that level, a bounce off the overbought. You've got your MACD divergence. This sign here is where I think we need to be. Now, in terms of my take profit target, if I entered here, would be here. And then what I would have done is, I think it probably would have hit it on that particular day. But if it didn't hit it and I saw this pivot line print over here, I probably would have moved my take profit to slightly down here. And then in terms of my stop loss, again, I probably would have put it underneath this low here. And I've got a video on how I set my stop losses, but effectively what I'm looking for is strong resistance. So price has to pass this pivot, all of these MAs, and break this low. So there's 3 steps or layers or lines of defense, as I like to call them, that price needs to go against to hit that. And then I would look to try get a 1-to-1 kind of take profit, which probably would have been just about right, depending on how it looks. So I know that was a lot there, and I drew a lot of stuff on the chart for you there, but watch this video back again, because once you get this and you practice this on a demo account, you will then start to understand about how you can identify a trend, how you can assess over here that things are starting to move, and then looking for that positive signs or break that a reversal is actually happening. Because there's no point taking entries here or taking entries here, because price could easily go back and start to reverse. You really want that confirmation that a new trend is potentially happening by that point. And then what you can also do, you can also wait a little bit to see if these MAs start to, cross over and things. But again, partly that's quite late into the game. And one other thing that you can also potentially do is draw a support line or resistance lines at the highs and look for a break above the MACD. That's a bit more of an advanced technique, but I've tried to keep it simple. Go back, have a look at some charts. Not every example is going to work as textbooks as this, but you'll see that majority of the time there is ability to kind of take profit from the market doing this approach, because you are waiting for confirmation and finding the best setups through missed pivots, through overbought, oversold areas, and also natural support and resistance lines. So on the screen now is my missed pivot thumbnail for that strategy, which is kind of similar to this, but it goes into a bit more detail of that, as well as my divergence playlist as well, if you guys are interested in divergence. So appreciate you guys watching this video. Make sure you like and comment and subscribe, and I shall see you guys in the next video.